All right, let's just jump right into it. What if I told you that there's this secret playbook, a set of rules that the wealthiest people are using, not just to, protect their money, but to have the system actually pay them to get even richer? And the crazy thing is, it's hiding in plain sight. It's the US tax code, which really makes you think, what if this thing we all see as a burden isn't a burden at all? What if it's actually a playbook for building serious wealth? While digging into this, I came across a quote from a CPA, a guy named Sherman, and it stopped me cold. He said, "The IRS will literally pay you to make certain investments." Pay you? That one idea, that changes everything, doesn't it? Okay, but before we get into the how, the really juicy stuff, the specific plays, it's absolutely critical to understand the why. This isn't about finding glitches or loopholes. It's about understanding the game the government is actually playing. And here it is. This is the big aha moment. We always hear about tax breaks and think there's some kind of sneaky loophole, right? Like you're getting away with something. But that's not what they are. They are incentives. They are totally intentional. It's basically the government putting up a huge neon sign that says, "Hey, please do this for us." So what do they want? Well, the government needs certain things to happen to keep the economy humming. They need jobs created, they need housing built, they need energy produced. And since they can't possibly do all of that themselves, they use the tax code to encourage you, to pay you really, to do it for them. All right, let's get into the first big play from the secret book. Path number 1, build a business. According to our source, this is, without a doubt, the single best tax deal in all of America. And if you want to see just how powerful this is, you don't have to look any further than one of the biggest players on the planet. For 2 years in a row, 2017 and 2018, this is how much federal income tax Amazon paid. That's a zero. A giant, fat zero on millions and millions in profit. And that just leads to the question everybody's thinking, right? How on earth is that even possible? Well, it's possible because they played the game perfectly. They weren't just sitting on piles of cash. They were making strategic reinvestments. They plowed their earnings right back into the very things the tax code rewards them for: buying up property and warehouses, investing in fleets of equipment and delivery vans, and pouring billions into research and development. Every single one of those moves came with a massive tax deduction or credit. And look, this isn't just a game for the giants. Let's say you're thinking about starting a little side hustle. You can get in on this right away. First, you can write off up to $5,000 just for the time you spend researching the idea. Then you can write off another $5,000 for the costs to actually form and organize it. And then, once you start making money, the government just gives you a special 20% deduction just for being a small business. So business is obviously a huge one. But what if you're not trying to start a whole new company? Well, that brings us to the next chapter in the playbook, Path 2, Shelter in Real Estate. And there's a good reason this is one of the world's most famous tax shelters. And at the heart of it is this kind of mind-bending idea called the depreciation paradox. Okay, so in the real world, your property, it goes up in value, right? It appreciates. But in the bizarro world of the tax code, the IRS lets you write it off as if it's literally crumbling into dust. It's like financial magic. Your building is worth more, but on paper, for tax purposes, you get to claim it as a loss. Now the pros take this and put it on hyperdrive with a strategy called cost segregation. They bring in engineers to break the property down into all its little bits: the carpet, the light fixtures, the wiring, things that wear out faster than the building itself. This lets them accelerate those depreciation deductions like crazy, creating these enormous paper losses in the first few years they own the place. And the numbers are just staggering. Our source put it this way: on a $1 million property, you might be able to generate over $200,000 in additional deductions in 1 year alone. Think about that. That deduction could be more than your entire down payment. Okay, on to our final path. And this one is probably the most aggressive, and from a pure tax perspective, the most lucrative of all. Path 3, fuel the nation. The government is frankly desperate for America to produce its own energy, and the incentives they've created here are just on another level. So here's the play, boiled down. Step 1, you invest, let's say, $100,000 into an oil and gas drilling project. Step 2, that same year, you get an immediate paper loss of around $85,000 to deduct against your other income. And step 3, as that well starts producing, the income you get from it is also tax reduced.
It's this incredible 1, 2, 3 punch of tax breaks. You get to deduct the intangible costs like labor and fuel right away. Then you get to depreciate the physical equipment. But then, this is the wildest part, you get something called the depletion allowance. It just makes 15% of all the revenue from the well completely tax-free. It's unreal. You get a massive deduction on the way in and then a tax break on the money coming out.
But, and this is a huge but, we have to add this very important note from the source. This path is pretty much exclusively for what are called accredited investors. That means people with a high net worth or a very high income, and it comes with significant financial risk. So this is not something you just jump into. You absolutely need professional guidance. Okay, wow, that was a lot. Let's pull back for a second and just look at the map we've uncovered here. Let's recap your financial playbook. You see how it all connects back to what we said at the beginning? It all comes back to those government incentives. These 3 paths to tax-advantaged wealth line up perfectly. Path 1, owning a business, is about creating jobs. Path 2, real estate, is about building housing. And Path 3, energy investing, is about producing energy for the nation. So now that you've seen the playbook laid out, it leaves just one last really important question. You're not just a taxpayer anymore. You're a potential partner that the government wants to work with. So the only real question left is this: which path is in your playbook?